Welcome to What I'm Watching This Week. This is the video version of the online What I'm Watching This Week, which can be found at dreadheads.net or at drcwealthmanagement.com. I am Bobby Cherry. So let's get into the overview of last week, the 13th of February. Large cap stocks, they led the way last week. They generated the best results while the small cap Russell, the 2000, was a lagging index. The S&P 500 continued its winning streaks. However, the VIX index began to tick up slightly, giving us an indication that some caution should be extended going forward. Just a simple reminder that there's still some volatility in the market. U.S. economic data released during the week was fairly strong. Core retail sales increased in January, and the core consumer price index rose during the month, while business sentiment remained strong for both January and early February. Fed Chairman Janet Yellen's congressional testimony last week was generally interpreted as being hawkish, raising the odds of a rate increase before their June meeting. The increasing expectations of the Fed moving rates higher sooner rather than later have boosted the financial sector to some solid returns. And this is being led by the banks that, of course, would benefit the most from the higher interest rate margins as short-term rates increase. Strong performance in the biotech and the pharmaceutical stocks drove the gains for the healthcare sector last week. U.S. Treasuries finished the week a little changed as the Friday rally drove yields lower, offsetting yield increases that occurred earlier in the week. Please keep in mind that bond prices and yields move in opposite directions. Investment-grade corporate bonds benefited from this activity. It should be, however, noted that investors seemed hesitant to add to riskier holdings in the secondary market. High-yield bonds also generated gains as investors continued to move money into this asset class in search for yield. Municipal bonds declined for the week. The yield on the 10-year benchmark municipal debt increased to its highest in 2017. However, the municipal market improved toward the end of the week as treasuries rallied. Upbeat global earnings are confirming that the benefits of reinflation, which are rising wages and growth, are spreading beyond the U.S. borders. We see room for more upside from corporate profits, especially in Europe and Japan. Our analysts have become increasingly upbeat about corporate earnings in Japan, the emerging market, and in Europe, and have been so since late 2016. Earnings estimates have been revised up in these markets and lowered slightly in the United States, with Japan leading the crowd. Global earnings are collectively posting some of their best performances since the end of the financial crisis. We expect this trend to extend as the world's growth gains more momentum. In the commodities markets, grains and wheat futures are mixed as the trading in the U.S. resumes after the President's Day holiday. Soybeans are hanging on to a modest gain, and coin prices are slightly higher. The dollar has strengthened on the speculation that the Federal Reserve could be ready to raise rates before its June meeting, probably as soon as March. That's the speculation. Crude oil is still trying to hold on to its gains of almost $1 a barrel from last week, despite news on Friday that funds built up another record bullish bet on the commodity. We expect more volatility within the oil markets. And there you have it. There's your video version of what I'm watching this week. Again, please feel free to visit us on DRC Wealth Management or at dreadheads.net for the written version. We will see you next week.